Hello there, guys. I got a pretty interesting business for you guys here today. This is going to be Lion electric vehicles, mainly commercial and school buses, actually. So this might be a great way to capitalize on the whole EV boom, the whole EV bubble that we're in right now, the whole EV hype. And this is another Spac company. I know we've been talking about a lot of Spacs recently, but the Spac market is hot right now. You have so much money potential. Right when this merger was announced, just check this stock price out. And now I'm going to let you guys know if there's still room to run, of course. Over the last month, we've simmered down a little bit, just a little bit, coming off the highs. So I think you're going to like what I got for you guys here today. If you guys are new to the channel, be sure to subscribe to the channel. And as always, this video is brought to you by Webull and M1 Finance. We both get some free stocks, and you could get 10 free bucks with M1 Finance. So those will be down below. But let's get into this business. It's quite interesting, and they've done something recently. This is the reason why it's caught my attention, really, is I saw this article here, right here. Lion announced yesterday, or the day before that, on the 7th, they announced that they entered into a reseller agreement with ChargePoint. If you guys don't know ChargePoint, that's another one of these hot businesses in the EV niche. Everything is really just hot whenever you speak about EV stocks, and you clearly can't go wrong with any stock that you pick in this niche, honestly. But this is a good partnership. They're going to have access to all of ChargePoint's full line of commercial chargers. So this is just helping Lion out with getting all the necessary charging hardware that they're going to need to be able to run all these school districts, of course, and just other commercial vehicles. But as for Lion, guys, let's look at their product lineup. So they got school buses, right? This is a big part of their business, I believe. But as for other things, they have a normal just transit bus, and that's just a normal bus, a lot like any other public busing, which is obviously a good little niche to hit in right now. We saw some other Spacs pop off recently that are in that exact industry. But one that I'm even more excited about, they have orders from Amazon for this truck. It's just a little fleet box truck, right? It looks pretty good. It looks pretty solid. This is a Canadian company, actually. So they have a pretty, I guess, a French-inspired or European-inspired theme or look, in my opinion, at least. And I definitely like it, the look of it. We got to know that the product looks good. We like the product. And that's really one of the most important things when we're looking at companies. But this Spac is set to go through Northern Genesis acquisition. That's why it's NGA. So the ticker will be LEV once the Spac merger goes through. And we have a valuation of $1.5 billion, which seems pretty high, but we're going to look into the whole prospectus of this whole business, and you'll see that it's not as high as some of these other businesses that are going out. Now, there is some problems with this. The NGA, that whole Spac acquisition, is not going to have a huge portion of the business, and that's what we're going to talk about in a minute here. Now, of course, not going to go over the entirety of this whole investor presentation, but we're going to hit the key parts, and just so you guys know if you guys should be looking out for this, putting it on your watch list, or even buying it if you guys are really in love with it. Personally, I'm going to be holding off on this one for at least a little while longer. And there's many reasons why, but I'll show you guys them here soon. Let's go into the partners, because this is something that's really important in an industry like this. So we got to look at, first of all, the key suppliers. So if we look at long-term battery supply, that's going to go to BMW, okay? BMW and LG, okay? So these are great partners to have in industry with electric vehicles, obviously. I know it really flies under the radar, but BMW is being very innovative in the electric vehicle niche. It just doesn't get noticed very often because all the names are Tesla, NIO, so on and so forth. We could go through the list of like Li Auto and all these things, but BMW, if there's a few legacy makers that are going to thrive in the EV market, I would say that this is going to be one of the top players. Them and maybe even like Toyota, but the Americans, well, they're just not catching on for some reason. But I like this partnership between these two companies. They also have a few other partnerships, and they added this recent partnership that we're talking about with ChargePoint, and they are going to be very good to be able to charge all these buses that they're going to be putting on the road. All right, let's look at the customers though. Amazon was one that really popped out to me because they're only ordering 10. Obviously, 10 is not much, but this is just their trial run, right? Do we like the truck? Are we going to keep buying it? So this is the customer to look out for because we know how much potential Amazon can bring to the business. Now, another thing that's pointing out is they did come out with a trash truck as well recently, and they already have orders for that. So Lion currently has 7 vehicles available for purchase today. We have the Lion 6, a box truck, and then 3 other box trucks. We also have the waste management truck. So this is an all electric truck, an EV garbage truck. So they're really hitting the all-electric, medium, and heavy-duty vehicles, mostly commercial vehicles, and of course school buses. And we could see that they have a good deal of customers already, and we have to just see if these are repeat customers. That's one of the key takeaways with this, if they want their revenue to be anywhere where they think it's going to be in 4 years. I think it's quite incredible how high they think their revenue is going to be. We're going to skip over to the numbers because at the end of the day, that's what we're looking for. We're looking for price predictions and we're looking for numbers. And in my opinion, there's a lot of potential here. So if we look at the entire industry as a whole, this is a $120 billion addressable market. So this market of heavy duty trucks and school buses of 45K and 335K. So this is $110 billion annually between the US and Canada, and that's really their main focus right now. They're looking to just expand really heavy into US. They're making new manufacturing facilities there, and that's really the main thing, mostly because the presidency that we're about to go into, if of course that stands still. And even if not, right, US states have already set a 100% goal for all vehicles of the heavy and medium and heavy duty vehicles to be zero emissions. Now, this is what I said about the presidency here. So they have some energy plan, like clean energy plan. Everyone pretty much knows that. So it will definitely accelerate the market that they're able to hit, the electric vehicle market between heavy duty, medium vehicles, commercial vehicles, and school buses, and especially states like, California, they're going to be zero emissions by 2030. We already know how hot the EV market is. It's no surprise that all of these big S&P companies are in talks with Lion Electric, and they might be potential customers, even if they could get some of these. This has a total addressable truck market of 40,000 trucks between all of these companies. These are massive companies that even if they could just get a small portion of the orders from them, they will be in a very good situation, sitting at their market cap of what, 1.5 billion right now, which is actually a little bit higher due to the run up in the stock price over the last month. All right, so let's talk about the ownership stake. So these are current shareholders, right? But this pie right here is going to be Spac investors, okay? So all of the Spac investors, as in us right now, if we were to buy it, that's 20% of the business, which is not much, but we got to look at the market cap. People, I think, get distracted by this. They say, oh, it's a $10 billion business, but they try to run up the Spac company to $10 billion. And you know what that causes is a lot of confusion, and SPACs are confusing if you don't know what you're doing. Now, they also have some other interesting things here. This one was interesting to me. They have a multi-year purchase agreement for customers. So customers that buy from them have the potential to own up to 6% of Lion. Now, this is big because these customers are going to be more incentivized to buy from Lion, of course, because they're going to want to own and benefit the company that they have the chance to own. So as long as Lion makes a good product, I can't see any of these businesses not really trying to take a piece of the pie, right? They see the market cap go up crazy, like it might in this SPAC IPO. And if that happens, they're going to want to benefit the business as much as they can. It's always just a business at the end of the day between all of these different companies. But we're going to get back to this 20% number pretty soon. We're going to have to talk about that number once we get down into the financial forecast. So let's point out the numbers that we got to be looking for. All right, to start off, we got to look at sales, of course. Truck sales, bus sales, total units. Okay, by 2024, we're expecting 18,000 vehicles per year, which is, it's not that much if you compare it to like normal car manufacturers. Look at Tesla, NIO, they're going up to 500 million cars, right? And if you look at Ford, we're in the multi-million cars a year. But these are bigger vehicles. They're going to take more work to make, of course, and they're higher tickets. So you don't really have to look at it the same way. But year over year growth is just substantial. And they're going to have to do a lot to get here. And that's why I'm proceeding with a lot of caution with this one. Because this is the investor presentation. They're trying to make this look as good as possible, of course. But just assuming that these numbers hold somewhat true, we're looking at truck revenue or total revenue of $3.6 billion. And that would equate to a free cash flow of 334 if all of these numbers stay true, which I doubt they all true. Some may be lower, some may be higher. So you got to take this with a grain of salt. But the free cash flow at 334. So if I go through a general assumption here at 334, a free cash flow by 2024, we are talking, what is that? What do you think is a fair price to earnings for this business? Since it's in the EV space, we could rock out a higher PE, of course, but I'm going to be conservative. I'm always super super conservative with SPACs, if you guys don't know that already. I just have to be conservative because I just don't trust them entirely. It's not as established as a business as some, and I really try to avoid these businesses that are negative free cash flow. If you guys have seen my channel at all, I like positive cash flow for the most part. But since I know this industry pretty well, I'm not too concerned about it. So we're gonna go 334. So I'll put this in millions so it makes more sense, and then we're just gonna assume a 20 price to earnings ratio. I think that's fair for pretty much any company on the market, and that would put us at a valuation of let's just roughly say $6.7 billion. So a $6.7 billion potential if all of this remains true. Okay, now that might look attractive to you because we're talking like 2x returns, but we got to look at the shareholder equity and the current evaluation of the company. So if we look at NGA stock, we are valued at $614 million. Okay, so if we're at $614 million, guys, and we have 20.5%, we'll just say 20% to make everything easier here. 20% at 614. Okay, that is a fifth of the business. Okay, we own a fifth of the company, so this company is already valued at 614 million. Let's times this by 5 because that's the true evaluation that Wall Street has this at. That would be about $3 billion. Now, don't get me wrong here. $3 billion and the 20 price of sales on a company in the EV industry is something to be attracted to for sure, because the EV industry, look at these guys' growth. If you just look at that, look at their revenue growth year over year, they're expecting over 100%. That's why I'm proceeding with much caution, because what if they don't go over 100%? We're at a $3 billion market cap right now. And I said, right, it could get to, if we do the 20 times, right, that would be around 6 billion. So that's 2x, okay? That is a 2x potential with very high risk, okay? Now, just because it's high risk doesn't mean I'm not on board. I think I'll do a speculative play with this one because I do think the 2x is potentially gonna be coming here soon, and that could be very nice. But 2x over 4 years, about, right, 2024, end of 2024, that would equate to about a 25% return, okay? And I'm talking annually. So annually, you're gonna get a 25% return, which in my opinion could be good, but this is a company that is fairly valued, okay? If we're looking at 334, we're assuming that it has a 20 PE, which is surely unlikely, and I could see it going in a very bullish case. It could be trading at a 40, 50 PE as long as we see growth numbers along the lines of 100+%. If we could see this and them execute their plan to expand into America the way they say they're going to, this is a business that could be worth up to 9, 12, $15 billion come that time in 2024. If that's the case, we're looking at 3x, 4x. So in my base case, I'm talking pretty much a $6 billion company by 2024, and that would result in us basically at a 2x, which is 100% over 4 years, 25% a year, which in most cases is going to beat the market, but with extreme risk, okay? There's a lot of risk holding a company like this, so it's completely speculative in my opinion, and I like this business. Just, I would like to see a little bit cheaper, just a little bit cheaper for me to actually throw a sizable amount of money in here. Right about this price, I would probably throw in about a half position, so like a 1% of my portfolio in this business out of a 40 stock portfolio. Okay, I would not be going deep in here at a price around here, right? $12. If we could get into the $500 million market cap range, $400 million market cap range, I'm all in. You can call me up and I will be buying probably at least a full position worth. I'm okay with having some speculative plays. You guys know all of the SPACs that I already own. I have videos on them going back a month or two. And this is just another one that I think has the potential to have that 2x potential just on my base case, as long as they aren't fluffing their numbers here, which they could. Quite frankly, they could be just BSing us. But compared to other companies, right, they're estimating all the way to 2024. But if we're looking at 2024, these companies are trading way, way, way higher than Lion is. I would say the closest company to them in what they do would be Arrival and EL Fleet. And all these companies are priced about the same here. So as long as this company keeps innovating, keeps making new products, keeps getting better partnerships with these big Amazon, UPS, USPS, any guys that they could think of, the trash industry, the school buses. This is a business that I can't see myself losing money on, and that's why I like it. I just don't know if it's the best return on my money at this time. So I'm proceeding with caution. I recommend you guys do it as well, but do your due diligence, do it even further than what I showed you here. This is a basic, just a very basic fundamental analysis on the company, and of course, just explaining the company. So you're gonna wanna do further research, of course, but this is probably a good place to start. And I will see you guys in the next one.